All right, welcome in everybody. Sorry they changed the interface on me that we do this live stream on, so there might be a couple little herky jerky things for me to get it to look right, but I will do my best. So good to see you guys rolling in the chat. If you guys could say hi just to make sure the audio and all that is working fine, that would be great. And thank you for joining us for our first edition of the AI Circle in August. It's kind of hard to believe that half the year is already gone, and it is what it is, though. Time moves on. So I know Kelly was having a little bit of camera issues, so I was letting him reset that before we got going. But while we're kind of here, for anyone who is new, we'll get this disclaimer out of the way here in a minute. But here's the basic agenda that we like to go through. We'll spend a majority of our time on the market, just giving updates, kind of like we said last time, the market's just kind of been floating up this summer. It's been an interesting one that I would say sell in May and go away has probably not served people well. Let's talk about any trades the AI's made, if there have been any. I don't think we've really had a ton, to be completely honest with you. And then maybe the reason a lot of people are here is we do a Q&A section. They can either be at the start. A lot of times people will hold their questions till the end, but feel free to get them in the chat as soon as you possibly can whenever it comes up, so that we don't run out of time to answer your questions. And with that being said, the last thing that I will show, if I can go back, is I'll get the disclaimer out of the way, and then we'll bring Kelly on and get this thing started. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak with your CPA or financial representative to ensure the iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. With all that being said, Kelly, can you hear me all right?
I can. Can you hopefully hear and see?
Yep. You're 2 for 2 right now.
That's a winner. I'm sorry, everyone. I've apparently my video freezes up, so if I end up frozen with a weird look on my face, someone let Lee know.
That is all right. No one's here to just stare at you and I, so they're more about the content anyway. As long as we can hear everyone, we're good to go.
The eye candy of our show should be these charts.
Absolutely. I'm not sure how much you heard of what I said, but if you had anything to add on to that, feel free. Obviously, the disclaimer is all out of the way. We can get your screen going if you'd like, but I didn't know if there's anything you wanted to add before we started.
I don't think so. I think, again, as so much is happening, but it does not seem to be reflected in the market other than the melt up that we've been talking about for the last 6 weeks or 8 weeks, which means at least 3 or 4 of these AI circles that we do on Wednesdays. And it is really just a continuation of a boring mantra, which is the good news of it, of course, is it is just going higher in a painful way. It would be painful to be a short in this market because you don't get but a day of love, and then it's followed by pain on both sides. So with that being said, Lee, let's get the charts up and let's start looking at it. So again, we'll start off with what we all know, which are the market headlines, and then we'll go into some of the more specifics, and then have the usual kind of what's going on around the world that kind of causes all these things to happen. And of course, obviously, what causes all things to happen in the market are 2 things. One, the Federal Reserve, and that means interest rates. And the other one, of course, is the federal government in any kind of fiscal policies that they enact so that it can change the amount of money that Americans and people around the world have in their pockets. So tax cuts are good, more money in pockets, stocks go up. Tariffs are generally considered bad, less money in people's pockets, prices go down. Although that hasn't been the case this time around with the tariffs. All right, let's go for it, everyone. Here's the Dow Jones, my least favorite index. We all know what it is. It's only about 1.5% off of its highs. If I were to look at the S&P, it's the same, about 1% off the highs. NASDAQ, same, 1% off its highs. If not, tomorrow we're likely to print another new high. More interesting thing that's happened, of course, because of the Monday's job numbers that that surprised the revisions that surprised the markets. The interest rates on the 10-year has gone down below 4.25%. And you can see that here with this little jump up in price, higher prices, lower rates. And this kind of bodes well for an interest rate cut that may occur even before September. And that, if also coupled with the news that one of the Fed governors that was appointed by Biden is going to step down, allowing Trump to appoint someone else into that area, which could create up to 3 dissenters. By the way, everyone, dissenters inside of a Fed opinion is very rare. Doesn't happen much. And it's happening here. Why does this occur? Generally, there's unanimity. Yes, it's a tough one. I got it coming out with it. With people on the federal board, they all tend to vote unanimously with each other, one way or the other. And in this case, now we have a dissenter. Powell wants to keep rates unchanged. Then we have dissenters saying they want to lower rates. And now, of course, we have a third person that will be adding to that voice shortly, which means a Fed rate is definitely, I feel, imminent in September, if not now, possibly a little sooner. So interest rate cut generally will mean the market will not explode higher, but it will just do the same of what it's been doing, grind higher. If we look at the Mag 7, here they are, Apple up big today. Kind of know why. More news out there as to future sales abilities for Apple. Amazon, after a rock bad day on Monday, even though they had good earnings, they cut forecasts. But guess what? Market's bouncing back already. I wouldn't be surprised to see Amazon back up closer to its highs, around 235 to 240 sometime next week. The rest of the markets, again, they're kind of grinding higher on the Mag 7. Even Google is catching up to maybe print a new all-time high. Meta, it's just such a good stock. You can hate the owner, but he's just the messenger for the company. The company underneath is very, very solid. Even, I will admit, even their glasses, if I didn't think I'd look crazy in them, maybe they would, they're certainly going to help a lot of people become smarter on the surface. Netflix is a company that I think any dip you buy, here's an example of one. It's up just a couple of percent today, no big deal. But remember, it is down, almost 10% from its highs. So if when you see dips in good stocks, generally they're a buy, especially in a market like this. Microsoft, kind of the same, printed a ridiculous high, came off, but it's probably going higher. Nvidia, it's just a march. An article came out against Nvidia. There's a new company called Z.ai. It's a Chinese company that apparently all the evidence out there says that their product is even cheaper than DeepSeek, and it is the same speed as what we get with the A100 cards that NVIDIA offers here in America. So no matter what is said, this is a company that I have many mixed feelings. I understand why it's being bought, because it is the American base and essentially the Bank of America of AI. In other words, it literally represents AI in America. But the reality is that there is other AI out there that is the same speed at a fraction of the cost. Market share is being lost. 12% will be lost by the end of this year for NVIDIA against worldwide AI sales. Who to? The Chinese. And it's because their product is not just competitive, it's the same. And it's as fast. And it's, again, a mere fraction of the cost. So it's just hard for me to visualize why NVIDIA doesn't recognize that. And I think it's just because of the momentum. People haven't come to grips with the reality of worldwide AI development. The oil markets are steady. Oil has been steady in this range, around $65 a barrel, 64 here. And it's just in this range where we can see literally from the beginning of the year, the highs were at the 76, the lows were at 56, and now we're at basically 65. So what is that? We're in the middle. My two favorites, they're just hanging in there. They're doing a lot of nothing but paying dividends. Same thing. If I look at ET and PA, they are the same story. These are great holds. They're still paying huge dividends. S&P, we just saw earlier, it's moving higher. JP Morgan, some of the bank stocks, they're all looking good to me. I really don't see any bad charts. If I'm looking at charts, there's Goldman, right on its highs. Here's Fannie Mae. I mean, even just trying to grind higher. If we have lower rates, there'd be more mortgages, and that's going to bode for all Fannie Mae products to go higher. Cruise lines, interestingly, having a great year. From the beginning of 25, they're up significantly, like 40% on the year. There's Carnival. Something bad happened to Carnival, I understand, in Italy last night, but didn't seem to hurt the stock market or stock price that bad. Here's Norwegian. Again, they're kind of climbing. Norwegian hasn't done as well. It's down on the year, but it's recovered a great deal from 15 to 24 since the lows of April. Planeteer, what do you say? It's up 130% on the year. Look at it go. It is in some of our Smartfolios, and it's obviously going to be long. My other two that I've been watching, with crying eyes, I guess, is Texas Pacific is just kind of lamenting its area here at $9.50 a share, holding on. Let's see. My guess is that generally the fourth quarters, as we saw last year, generally bring a love to these stocks. I do like them. They are data center bound products, and let's hope that they build some data centers on their land. Landbridge being the other one. It seems to have made a bottom in here at around $50 a share. It's now at 59, trying to recover. The main range for this is about $67 a share. So it's really just off about 10% from where I expect it to be. If we move into Bitcoin, let's take a look at that through the IBIT product. It is just kind of hanging in there. It did take a fall on Monday with the rest of the stock market from the job numbers. But again, this is just a product that's going to go higher. We should mention the Ethereum a little bit. We will be creating a product shortly that is the same as BitFlip, but instead of being Bitcoin as the underlying product, it will be Ethereum. Why? There is a demand for it. Part of that demand has come because, as we saw, just like many of the other things in the stock market, the lows of April brought the lows of Ethereum. And now Ethereum 2.0 seems to have a lot more Bitcoin properties. And albeit that I'm a believer in the Cadillac of the product, there is demand for Ethereum, and we will start with an Ethereum BitFlip product. I think we're going to call it EtherFlip. So, but that hasn't been coined completely yet, pardon the pun. So maybe we will have an EtherFlip product that represents Ethereum as the underlying growth asset. I guess a few other things to quickly look at that I follow are things like Costco. Costco is about 10% off of its highs. It's obviously, if we don't all shop there, we certainly know what it is. They do have good product. It's an experience for a lot of people. I do feel that Costco over time will go back and make new highs, probably somewhere in the 1100, 1150 area, maybe hopefully by the end of the year. What else do we have going on? The water products are just, I do follow things like water. energy, minerals like the Musabi Trust. Let's take a look at that real quick. And I just keep an eye on these things. Why? Because the way the world is moving, it is moving towards energy and water and minerals, just because of the nature of the way mankind is growing and the needs that mankind has. And that means that there is going to be more demand for precious minerals. And, well, even if they're not precious, they need to be mined somewhere. And so I do look at these companies as potential, good buys or things we can add to Smartfolios. If they're just plain buys and we don't add them to Smartfolios, you'll hear about them here. And if we do add them to Smartfolios, you'll still hear about them here. Let's see. I kind of got to a spot here where I went over the basics. We got everything through crypto. Lee, are there any questions out there? Let me see what I can see.
Just one that I was going to hold for a little bit. But back to interest rates, because I think we spend a lot of time talking about them. They're obviously very important. One thing I hadn't been asked before, but I was the other day, was basically, like, what, in your opinion, what do you think the likelihood or probability is that they actually do cut rates before Jerome Powell is done as the Fed chair?
Well, Jerome Powell will be done in May. There is right now the futures market predicts a 65% chance that there will be a cut in September. So I don't have to predict. We have futures markets which predict the Fed funds rate. Will do that for us. And right now that's the prediction, 65. It might have even gone as high as 70 just the other day because of the other Fed chair guy stepping down. Again, it is very unusual to see dissent among the Federal Reserve. And that tells you that the Federal Reserve is divided. Some people think they should cut rates. Some people feel they shouldn't. Most people traditionally follow the Fed chair. But this Fed chair has been wrong. He has been late. Let's face it, folks, there was a great deal of inflation. He kept rates low for longer than he should have, and he's now keeping rates high longer than he should. He seems to be accurately labeled wrong way Powell. It just doesn't seem to be timely in any way, shape, or form. And frankly, I've been around the business a long time. There's been a few presidents that complain. Ronald Reagan complained deeply, vocally against Paul Volcker. Paul Volcker was hated by Reagan and many other Republicans in the early 80s because he kept interest rates so high to combat inflation that you couldn't have any possible growth. However, history has shown that Paul Volcker did what most Fed chairs could never do. He really stepped on inflation and broke its neck quickly. It was very painful, 2 years of pain early on in the Reagan administration, where he was begging Volcker to lower rates and he wouldn't. Ultimately, they lowered in 1982. But Reagan had already been president for more than a year and a half. So, interestingly, I feel the same thing. I haven't heard, and by the way, after Volcker came Greenspan, and after Greenspan came Bernanke, and both of which were labeled in different ways. Helicopter Ben, remember, he always kept interest rates low. And we had Greenspan, who made irrational exuberance. Every Fed chair has something they're remembered by. But unfortunately, I think Powell will be remembered like Ed Burns, who was the purveyor it was the head of the Fed chair under Carter, when unfortunately the rates went to the moon under that president as well. So I'm not surprised that Powell is disliked and he's having dissent. But yes, I think the probability is high there will be an interest rate cut, which is one of the reasons why I feel the probability is high. The stock market will go higher by year end as it absorbs maybe as many as 2 rate cuts between now and the end of the year.
Yep. And shocker, your face did freeze again.
And that's
Well, while
try
you're
one
getting
more
that,
time.
I was just going to add on to what you talked about with Ethereum. So our Bitflip portfolio is the only crypto related portfolio that we have right now. Basically the way we're able to do that is that exposure into Bitcoin is actually through an ETF called IBIT. The ticker is the letter IBIT. So as more come out, like say, I know an Ethereum one has been here for a little bit. I think there's talks of Solana and XRP, all these other ones are these alternate coins. So theoretically, as these things come out, we could also, I'm not saying we will or we won't, but we could also add, more exposure into the crypto sector, if you will, as well. So that's
Right.
definitely coming, as Kelly had said earlier. And again, we don't want to give you guys 100 options to choose from and be paralyzed by all the different options, but we also want to be opportunistic and have things that people want as well.
Correct. That's well put, Lee. The best way to start is we will add the Ethereum. That came kind of from a demand side from our customers. And so we will start with a product like that. And like Lee mentioned, we will look at adding other kinds of baskets of crypto if necessary, and if demand stokes it enough. I really think that one is enough. Two is not a crowd. It's reasonable, but we'll see what comes after that. I do need to see some of these things, lend themselves to be credible for a long-term existence. After all, if you have a belief that something will go to zero, even if you think you can trade to make money in it, why do it?
Sure.
It's so many other things that are not going to go to zero. So we never have the threat of that.
Yep. I want to give you the opportunity to clarify one thing. We did get one comment from Alvin. It basically said, so if we're expecting a pullback in the markets, is now a bad time to invest in a portfolio, or does AI take that into account? So I think what you were talking about with interest rates and its correlation to the market might have been misunderstood here, or maybe I missed something that you said as well. But feel free to clarify this and then also talk about really what we're trying to do with the AI, which quite frankly is to skip those massive corrections.
Yeah. Yes. I don't see. I would like to see a dip in the stock market that could be bought. Some people feel that there's a chance for a 3 up to 10% dip in the stock market between now and the end of the year. I don't see it, but I don't see it now, and we're in August. Remember, next month is September. September is the volatile month. Should anything happen, my guess would be it'd be September or October. Right now, though, if we're expecting possible interest rate cut in September, the month where we see most of the volatility in the stock market, it's really hard to see the market selling off in a September where we had a rate cut, even if it's widely expected. And I see one of the people mentioned it's all the way up to 93%,
Yeah.
which I believe that to be the case. I feel there's two. It's a high probability, 70%, 93%, 100%. I feel they're going to cut 2 times before the end of the year. And I don't see lower stock prices after interest rate cuts, especially 2 of them, within a period of, say, 4 months. So we will see how it all pans out. But if I'm, as a betting man, and I would say that I try not to be, if I am a betting man, I would bet that prices of things will go higher under a lower interest rate environment.
Yep. I'm going to get a couple of Greg's questions out of the way. So Greg asked what SP 500 ETF. So the one that we use is the SPY. Let's see. It's not on Kelly's screen anymore. It was a little bit higher up. Yeah. Or maybe lower. There you go. So the SPY is the symbol that we use. If you're at a Vanguard or something, they have the VU and they have other ones. They're all, in my opinion, they're all pretty much the same.
Mm-hmm. There's the IVV.
Yep. And these, yep. That too. And the SPY's in a handful of our portfolios. It typically has a 15 to 25-ish% allocation, especially in the core strategies. Then as you get into some of the more sector focused ones, like say a big tech or a red oil or something, you won't see that in those ones, but it is in a lot of our core strategies.
Right.
And then along the lines of what Alvin said, Sanjeev had a question. But if there is a pullback in the underlying, will the AI engine take us out, or is that a manual process? I can answer this unless you want to, Kelly.
No, you go ahead and answer that one.
Yeah. So Sanjeev, the short answer is the AI will pull you out. So when you select a Smartfolio, and I wish I had my the screen share to share mine, but basically when you select a portfolio, say it's the balanced one, there are 21 things in this balanced portfolio. Basically, what the AI is understanding when you invest into a portfolio like balanced is that those are things that you want to own. And basically, the AI is going to pick and choose when it's the right time to own the things inside of that portfolio. So the SPY might be in there, Amazon, Nvidia, etc. I'm making this more long-winded than it needs to be, but the AI not only will find the entry point for you, but it'll also exit that position as well. So there's nothing manual that you have to do.
Can't add to that. It's all automatic.
Yep.
By the way, I'll add a piece of information on the reason why the SPY, is in most of our portfolios. It's in the balanced. It's in the aggressive. It's in the conservative. It's in the SPY plus. It's all by itself in the SPY 100, SPY 500. It's fundamentally the most important product inside of our business model. And the reason is because if we can manipulate that one stock, manipulate mean we can do a good job of managing the ins and outs of owning that. And it's such a large position generally inside of any of our core Smartfolios. We're able to move to cash, a large portion of money to cash or to the overall market very quickly, which means if there is a down move in the market and we can get out of that, it means our exposure is immediately reduced, which allows us that even if we were to remain in on every other symbol, we likely would lose much less than the market itself on a down move. And so that is why it's so critical. And if we're again, assuming we have the opportunity to buy it cheaper, it's a way that we might be able to outperform the market on a go forward basis. That's why building portfolios around a large core position of the overall market is fundamental. And that's one of the main things I see when I see a lot of clients come over. They bring portfolios over from other managers that are divided in such a way that their portfolios look like the overall market within their symbols. So if you have all the symbols that could represent the S&P 500, how do you manage all those symbols if the market is going down? You're forced to hold them. And holding stocks in a down market is not a wise thing. But so if we're going to hold them, we don't have to hold them all. Why don't we get rid of something like the S&P 500 and mitigate the loss on the downside? That's what we're trying to accomplish. It doesn't mean we do it every time. No. But historically, we have done well on these down moves where we have avoided them. Yep. And I actually think we will improve going forward because, again, that's the nature of the way we built the models around them, which are driven largely now by machine learning. Machine learning is supposed to learn. And hopefully it's a well-raised child. We will see as time goes by. So far, the evidence will give me, I think, an A. I'd like to think I can get that up to an A+.
Yep. And just my last thought on Sanjeev's question, like if you were to see what we own today versus what we owned at the start of April when the market was a bit in the toilet, like you'd see it's drastically different. I think in the balanced portfolio, we might have owned 5 or 6 out of the 21 stocks in there, whereas today we own not all of them, but pretty dang close to it. So
I own most of them.
yeah, and even a different example, I think I remember, and correct me if I'm wrong here, Kelly, but 2023, the market had a great year. We actually didn't own the SPY for very much of it, but still
Right.
performed very similarly, if not a little bit better than the buy and hold of the SPY, just because of the individual stocks in there. I believe a lot of it was tech stuff. I could be wrong on that. But you kind of made the point, you don't necessarily always need to own the SPY. But I do like it being a, 15 to 25% position in a lot of those core strategies. And that's exactly what I think you would want.
Yeah. Yeah, and that's also differentiates flip Smartfolios versus Smartfolio, or a portfolio you might get with another manager. Most managers won't allocate, these large percentages to any one symbol, with their fear being, well, that symbol represents the market. But that's exactly what you want. You want the market.
Yep.
You want to beat the market. So to beat the market, for the most part, you got to be the market, and then you got to work around the perimeter to see, how do I do a little bit better? How do I beat it? And so I can't possibly beat it if I have a whole group of symbols that represent the same thing, the market, because now I have too much to manage. You need to be able to manage something. So that's why you have to have one large component of every portfolio is a wise thing to do.
Yep. I'm going to get into a couple questions here. Alvin had one more, and I can answer this one. So he's asking, can I request to sell my money market fund and purchase a request for a fund after hours, or do I need to wait for the withdrawal to clear? So essentially, we do all of our trading on the open of the market in the Smartfolios. So Alvin, if you had the money market portfolio right now, it would sell tomorrow morning when the market opens. And then, T+1, you'd be able to reinvest that into something else. And it, as we said at the start with the disclaimer, like we're not here to give advice, nor are we allowed to, but based on your first question, I was like, maybe a money market thing wouldn't be the worst to have money into if you are believing there's going to be a pullback. I've seen people do that over the years. I've also seen people regret that they were in money market when the market just kept going up as well. But needless to say, you have all those options at your disposal.
Let me add one thing to that one as well. Yeah, you sell your money market now, it'll sell tomorrow morning, which means the T+1 means your money wouldn't be possibly available until at least Friday morning. And then if you were to buy another Smartfolio at that time, you may not be able to get it on Friday, just depending on how the banks clear it for that day. But by Monday, for sure, you would, right? Because it would be T+2 days. That being said, the S&P moves around about 0.5% a day. The worst that happens between the time you look to raise cash to go buy securities is 0.5 point one way or the other. And it could be down, which would be to your advantage, or it could be up, which would mean you would be in the market 0.5% higher. But if we're looking for moves that are 10, 15, 20%, 0.5% isn't what we care about. It's to be in for the thrust and the momentum of the market. And the individual days don't matter. I've, by the way, done studies that say that if we get a signal to buy on Monday, but we actually bought on Tuesday, we would be only marginally a little bit better off by buying on the day we get the signal, which is a good thing. It tells you that the systems are not dependent so much on the instant price we think it's going to be. And that's what we want. We're trying to capture the trend of the market, not the daily change of the market.
Yep. I'm just going to copy something. We've got a couple. Let's see. I hope this goes to the same spot.
Forgive my video, everyone. I apparently lost it completely.
You're good. Oops. Oh, sorry. I was going to go for this one first. So is there a beginner course on this? Really want to get started, but not exactly sure how to do this or how it works. So I believe I think the link's going to send you the right spot. I just didn't want a video to be going on and mess up our whole audio, but I'm assuming all you guys are watching on YouTube. If you go over, when this is done, if you go just to our channel, we have a playlist section, and I believe it's called like Intro to iFlip, or it's the first thing that pops up on the playlist. There's about 4 videos on there. The first 2 of them are about 3 to 4 minute videos, and they either, one will help you just walk you through setting up an account, or 2, it'll give you a more brief overview as to, quite frankly, who iFlip is and what we're trying to do with our AI. So I think it's Sheila. I'm hoping I'm saying your name right. I would start there. And if you have any questions, feel free to reach out to me and schedule a call as well. Lisa, is a Smartfolio part of my investment and mix it with something else? Let me see. And sorry, guys, I know I said at the start that they changed the interface of this. Let's see if I can share my screen. I'm totally hijacking Kelly's AI circle here. Kelly, can you see this?
I sure can.
Okay. So Lisa, so I'm just on the invest page, or the invest screen right here. All of these tiles that you're looking at are what we call Smartfolios. Maybe to correlate it to other questions we've had before, these top 3 are what we call core strategies or core Smartfolios. They're designed around risk. So, conservative, balanced, aggressive, all pretty common things that people have heard of. A lot of people maybe don't understand the different sectors, whether it be energy, tech, etc., but they know they're an aggressive investor, or they know they're fairly conservative. You can kind of pick based on your quote unquote risk tolerance here. So you can pick just one Smartfolio. You could use multiple Smartfolios. But back to an early question, this is basically your way of having control as to what you're investing your money into. So I hope that helps there. And if I need to share screen again, I guess I know how to do it.
Well, we're learning. I've learned that this new approach from the YouTube video, I lose my video. So.
That's probably an internet thing, but that's all right. Dean, do most clients / customers select one fund, mostly matching their interests, or divide amongst the different offerings? Seems like a lot of duplication. Yeah. So, Kelly, I don't know if you know off the top of your head, how many stocks would you say are across all 12 of our Smartfolios?
If we had to, a lot of the stocks that are in balanced are going to also be in aggressive.
Yep.
I can say that there are basically 45 different symbols that we follow intensely inside of all those different Smartfolios. That's number one. So figure there's 45 total different symbols being followed currently. We look at, by the way, many hundreds more, but those are the ones that are active inside of Smartfolios right now. And another question that I heard inside of that, I'll answer as well, is most people actually pick 2 Smartfolios at least. They'll pick, say, balanced, and say, hey, I feel that I want to grow my money, but I don't want to be too aggressive, so I'll pick balanced. And then they might pick for 80% and then pick 10% in high tech, which is very aggressive. And then maybe put the rest of the money in a money market that way, or keep it as cash so that you can buy something else later, manually, or other Smartfolios. But that's a way of kind of mitigating between the conservative and balanced, or balanced and aggressive. Just know that those are the 3 cores, but underneath those, there are other Smartfolios that are more aggressive and less aggressive. Less aggressive being like the least aggressive being a money market, and the most aggressive being the 4QR or the big tech.
Yep. The only thing I would add to that for Dean is I think at some level it comes down to account size as well. Each Smartfolio only has a $500 minimum investment. We could talk till the sun goes down about, what I would do versus someone else. But, if it's me, let's say someone makes their $7,000 contribution into their iFlip account. Like, some people would say, hey, I'm going to put $700 into 10 because I've heard diversification is great and all that. To Kelly's point about there being 45 stocks, there will be overlap for sure between all of them. And I see the money better utilized in maybe 1 or 2 different Smartfolios at that level. Now you have, a 6-figure account or more than that, then maybe you don't want it all in one portfolio. And I can totally relate to that as well. That doesn't necessarily make sense. And I know, Kelly, I know you wanted to keep this at a half hour. I can answer I think the rest of these questions if you do need to jump. I happen to have a little extra time compared to normal today.
Well, I've lost my video. And
Yeah,
so
that's all right. We can still hear you though.
I'll kind of stick around in the background while you answer a few.
Sure. So William, this is one that we went over a handful of times actually, because I thought it was a very good talking point. It was definitely something we were very proud of. But I'll just say this: the AI at a high level, it managed the SPY in April extremely well. There was a time the S&P was down 15% this year, and a lot of our customers that got into the SPY, and of course it can depend on their start date and all that, but they actually, a lot of people did get in on, I believe it was April 9th, that afternoon that Trump announced he was going to pause the tariffs. I believe it was on China. And the market roared up, I think 10 or so percent in a day, and then came down a little bit the next day. But nonetheless, it managed that incredibly well. And I used to maybe chalk it up to luck, but I've seen it so many times now. You can't get lucky that many times. It must be that the system's pretty dang good. For Carlo, Kelly just said this, I think, but you might not have caught it. And it was after your question for sure. So you can definitely buy individual stocks on the platform, not necessarily crypto. Let me get the screen share again. So let's just say you wanted to buy shares of Apple, because it's right at the top there where it said search stocks here. I would just click or type in the symbol for Apple. It would show me, a chart of it. One kind of cool thing is it does show if the AI has us in or out of that stock. The only difference here between buying something manually and buying in a Smartfolio, well, there's two things. One is, and it says here, but you're just going to enter the amount of shares you want. So if you want 10 shares of Apple, you would just type in 10 right here. The thing to know, though, it's also up to you to determine when to sell it as well. The AI is not going to interfere with what we consider a manual position or you buying an individual stock on your own. It won't touch it, won't sell it, won't buy more or anything like that for you, which is exactly what people want. As for crypto, like Kelly was saying, we do have this BitFlip Smartfolio. It invests into the IBIT. It's very unique. 50% is always long. The other half is managed by the AI. And as you can see by some of these returns, obviously Bitcoin has been incredible, as has this portfolio. One thing I like to point out is Q1. Bitcoin had a pretty bad first quarter this year, and the AI side of the house actually took us out of Bitcoin, and so we were able to lose roughly half, which is awesome. And then we got back in for Q2. So if you wanted to buy IBIT, on your own, you could. There are other, I think, Ethereum products if you like that, but nothing is in Smartfolios yet. So either use IBIT, or if you want to buy and hold something that's publicly available, feel free to do that there. And now I'll get back to the chat. Anything to add, Kelly? Anything I misspoke on?
Not that I think. I think you spoke well to all of those cases, and so keep going, Lee. You're on a roll.
And then Sanjeev, I think I briefly just showed this using Bitcoin, but yes, when you set up your account, you'll see the same view that I've been showing, even if there's not money in there. So you can look at every single portfolio. The default, it just shows you the quarterly returns. In my opinion, it fits better on a screen that way, but you can toggle it to be monthly if you'd like to as well. Catherine joined late. Is the only way to invest now to use Smartfolios, or can we buy individual stocks? So yes, you can buy individual stocks. Maybe something I haven't said, at least today. I've probably said it plenty of times before, but I think there are plenty of places out there to just buy and hold stocks. Like, that is not at all what makes us different. Typically, people come to us for the AI and the Smartfolios. So most of our customers are using the Smartfolios, and some people do both. But the majority of folks that join the iFlip platform, it's because they want to use those Smartfolios. Linda, or Lindy, I'm sorry I said your name wrong. Is the tech Smartfolio the one that invests most in AI companies, including startups and up and coming? So the big tech, let's just share screen again. Getting really good at this. Big tech here is just the Magnificent Seven. So, oops, that shouldn't be showing IBIT. It's just these 7 stocks right here. So, equal allocation for the most part into all 7 of these. You've probably heard them called the Mag 7 before. Used to be the FANG until they added NVIDIA and Microsoft to it. So, tech is not, and this goes for all of our Smartfolios as well. You're not going to see any startups on here or up and coming ones. The way I would put it is there's not enough data on those companies to have our AI give you any quote unquote advantage. Without data, AI can't really help you. Kelly might want to add something to that, since he's obviously more familiar than I am, but you won't see any, I think back, let's see, it was a handful of years ago now, but when Uber and Lyft were IPOing, a lot of people wanted that in their portfolios, and there wasn't enough data on them to figure out if it was worthwhile or not, quite frankly.
Right. At the end of the day, without data, how can the machine learn?
Yep.
You just need a certain amount of data where it becomes trustworthy enough. So I kind of the metaphor would be, you have a 3-year-old. It's got 3 years of data, but what has it really learned? The child has not learned enough. It's still formative. By 7 years old, you can see complex thought occurring. Levels of mathematics are occurring. So machine learning is a lot like that. It's a lot like the experience of raising a child, and maybe even to a certain extent, a dog. They can learn to a point where they start to learn for themselves. And so the same thing is the case with machine learning. There are so many parallels, and that's why they call it artificial intelligence.
Yep. I'll do a last call for questions here because we're a little bit over, but that's all right. One more from Catherine. Can I move funds from one Smartfolio to another? So let's share screen again. The short answer is you absolutely can. I'll just show you the mechanics of it. So I have a majority of my money in this one, just in the aggressive portfolio. Say I was feeling like, hey, I want to be balanced instead and use the balanced portfolio. My first step would just be to click on this divest button. Sell all is there where it'll just sell everything. If you wanted to take $1,000 out of this, you could do that too. But divest, sell all, that money will be in right here where it says pending cash. It'll be there for 1 day while all the funds settle. And then I would just go back to invest. And in my example, I said I wanted to put it into balanced. I would just type in right here the money to go into balanced. But with all that being said, I would take that with a grain of salt. You have full control to move, your portfolios around pretty much whenever you want to. But no, at the end of the day, no one wants bad performance. And one commonality I see of people that maybe feel like they are underperforming is that they're changing things around all the time. And like someone said earlier, there's a lot of overlap between, aggressive here and balanced. So what the AI would have to do is sell all these things at their current prices, and then it's going to go buy all of these in balanced. And for better or worse, you're forcing it to sell and then go rebuy these things. So take all that for what it's worth. But yes, in short, you absolutely can change your portfolio. You're not stuck with it forever by any means.
I'll add one last thing before we sign off. It's that one of the things that is probably the biggest no-no ever is to chase performance. You could see, a scenario where the big tech is up 30% on the year and the balance might be up 12. And you think, oh my God, next year I just want the big tech because it was up 30. And then the following year, when you do the change, what happens is the balance is up 15 and the big tech is up 10. And so never buy based solely on performance. If you think that way, the better move is to buy a little of each and spread it out that way. And just remember, there's a lot of overlap, like Lee mentioned. So if you go from balanced to aggressive, you might change 6 stocks, but the other 15 stocks are going to be the same. So that's something to keep in the back of your mind.
Yep.
Never chase performance.
Yep, totally. It's like when people think the more you trade, the better you do. There's actually an inverse relationship there,
Yes.
typically.
Typically there is.
Catherine, I was showing the invest button, which is in the top right corner of all of our screens. It's a big orange button. The home screen is another screen that we have. That's the one that right when you sign in and put your email and password in, that will be right where it takes you. So that one's designed to give you a snapshot of your account, show you what you're invested into, how the account's doing for that day, and etc. I think that might be it for today. Thank you guys for all the questions. I feel like we hadn't went through the platform and maybe answered some of those before. So thank you for all those questions. In the meantime, if you guys are new to this, we typically do this show roughly every other week or twice each month. So we'll be off next Wednesday, but we will be back on August 20th, same time as normal. And for those of you that did catch us a little bit late, this will be posted as a recording on YouTube right after we're done. So feel free to go back to the start and rewatch it. Also, as someone brought up earlier, we do have some videos on the playlist category of our YouTube channel. They're meant to be informative, very high level. Hey, this is what iFlip's about, or hey, this is a step-by-step guide as to how to set up your account. So feel free to watch those if you need any help. I'm always happy to help as well. Give me 1 second. I will put my calendar link in the chat if any of you want to meet one-on-one with me. And Kelly, in the meantime, any parting words for us?
No, everybody, if you watch a video of this, be sure to not see me again because my video died. I'll do better the next time, I'm certain. I hope. And until 2 weeks from now, all the very best to everyone out there. Let the market melt up.
Yeah. So like I said, we will see you guys back in a couple weeks. I'll just flash the calendar link on the screen in case you guys don't see it in the chat yet, but it will be in the chat here momentarily if you don't already see it. And in the meantime, thanks for joining us. Have a great rest of your night. Enjoy the next couple weeks, and we will see you back here on the 20th.
Take care, everyone. Bye-bye.
See you guys.